We begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Rebecca Ungrino, and Elizabeth O'Brien. So Ben, I often start out by asking you, how is the week in the market? This week, that feels like a trick question.
It is a trick question, Jack. If you look at the indexes, they were down a little bit, nothing too serious, no serious damage. But then you look at the rest of the market and you see that small caps had a fantastic week, up more than 2%. And even nearly 60% of the stocks in the S&P 500 finished higher, even though the index was down about 0.4%. I mean, it's the kind of broadening out in the market that investors have been waiting for a very long time.
And this feels like a good economic indicator. You want all the companies to be doing reasonably well, right?
That's right. For a long time, people think of the big tech stocks as being, very growthy and very, very risky. But in some ways, they're the defensive stocks. They're the ones that have no trouble just sucking in the money. And it's all these other companies that haven't done well. But now we're seeing the transports are doing great, small caps doing great. I think that's a sign that the market is betting on the U.S. economy heating up.
Small cap investors have been so miserable for so long. Can they finally smile? And if so, how do you get access? Is S&P 600 fund or what?
Yeah, I mean, it's been bad. They've underperformed by about 55 percentage points over the past 5 years. I mean, it's just ugly. But yeah, they're really outperforming right now. And it looks like they could have legs. The valuation is much cheaper. They're trading for around 15 times on the median in the Russell 2000 index. S&P is around 22 times. And you do have different ways to play it. You can go with the Russell 2000 ETF. That'd be IWM. That gives you a lot of stocks that aren't profitable, though. So you could go for something like an S&P 600 small cap ETF. That's SPSM, which gets rid of all those unprofitable companies. Or you could go for an actively managed fund, which is trying to pick winners. Two that stand out are the DFA US Small Cap and the FPA Queens Road Small Cap Value Fund. I could get tickers too, DFSTX and QRSVX.
DFA is FAMA in French, the original by the small cap guys.
And they mix indexing with active management.
All right. Quickly, next week, we got more earnings. What are you watching in particular?
Lots of earnings. Netflix, United Airlines, GE, Johnson & Johnson, Procter & Gamble. This is a chance for us to stop paying attention to all the macro, all the things that Ian Bremmer will be talking about, and focus on the micro for the companies. And there's a lot of good earnings expected, so we'll see how the stocks react.
All righty. Elizabeth, who was it? It was Mark Andreessen who famously said that software is eating the world. Recently, I think we got to update that to AI is eating the world, and it's actually munching on the software stocks.
Exactly, and the shares are feeling it. Software stocks had a rough week on fears that AI coding tools will eat into their business, and this is not a new concern, but the catalyst this week was the introduction from startup Anthropic of a new AI agent. So these AI agents are like a personal assistant, AI personal assistant that can actually do things for you, like book a flight, whereas a chatbot might say, here are the cheapest flights. And investors feel this capacity could, take over the work of software companies like Salesforce and Adobe. Both stocks are down around 30% for over the past 12 months.
Yeah, it's really interesting. Claude can code for you.
Yeah, exactly.
So Barron's, always looking for the bargains, says that maybe a few babies were thrown out with the bathwater in this sell-off. What do we like?
That's right. Yeah, Doug Bush, who's the technical analyst and chart wizard for Barron's Investor Circle, looked at the charts and saw promise in CoreWeave and Zeta Global Holdings, among other, companies.
All right, Rebecca, the bank beat reporter for Barron's. Lots of beats there. So your beat is always exciting this time of year. You lead off the earnings season, but it was even more exciting this past week. We saw a big divide, among other things, between the consumer banks and the investment banks.
Absolutely. It was really an uneven week. I mean, coming into the week, you had a really hot run for all these banks. I mean, Goldman was up 60%. JP Morgan had really run up. So expectations were high. They were kind of priced to perfection. And so we had kind of a soft start to the week. The credit card interest rate proposal from President Trump had weighed on sentiment. So that was kind of the backdrop. And it did get more positive heading into the rest of the week. But it was a rough couple days on Tuesday and Wednesday for the larger banks.
Elizabeth Warren must have fallen out of bed when she heard President Trump wants to cap credit card interest rates at 10%. They agree on that.
Yes.
But could this really happen? And if so, what would it mean for the banks?
The bank lobbies have really fiercely pushed back on this. You know, bank CFOs and CEOs did a number of calls this week with reporters and analysts, and they all kind of, you know, said the industry line, which is, you know, their argument is this would limit credit access for certain borrowers. It would also really take a hit to their profits, and the truth is probably somewhere in the middle. But, you know, this is a major concern for the bank executives.
Yeah, I don't think people ought to be borrowing money at 27%. Elizabeth's written about that a lot. On the other hand, I guess, you know, when you need it, you need it. All right, within this sector, what's your favorite stock?
Right now, among analysts, among, you know, some of the widely followed bank analysts like Mike Mayo, Citigroup remains one of the top picks. It has the most upside, you know, from the stock.
Which is kind of a backhanded insult, but
yes, it has the most to improve upon. CEO Jane Fraser has made a lot of progress, a lot of stumbling blocks, but a lot of progress on her internal kind of transformation, they're calling it. And so a lot of the analysts see that as a big opportunity right now, Citigroup.
Oh, yeah, they're leaning heavily into wealth. They're trying all kinds of things. We'll see if that succeeds.
Exactly, yeah.
Rebecca, thanks very much.